Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We do appreciate you being here with us each and every day, growling and prowling. Right now, you get the Dow off 107, Nasdaq's down 26, S&Ps are off 14. We get the gold contract up $37 at $1,829. Silver's up 81. Bonds are up a point and 26 ticks at 138, and the dollar index is up 37 ticks at 74.15. Morning, brother. What's happening, man?
Gold.
Yeah, gold.
Now you did a great segment on CNBC this morning.
Thank you.
Right?
And folks, yeah, you can see that segment. I was on CNBC at 6:30, kicking off the gold rush on CNBC. And you can see that segment right under breaking news at TFNN.
And it is a gold rush.
Well, it is. It looks to me, though, that all you have here, now this is what's going to get interesting, folks, is that this is gold going back up to ice where it came down from, So it's going to need a lot more than this to get up through this area,
Yeah.
What's interesting is, so we just had the consumer confidence number come out. So the consumer confidence in the U.S. Plunged to the lowest in more than 2 years on America's outlook on employment, incomes, and business. So what do you think about consumer confidence? So what do you think about the economy? I guess consumer confidence, does that mean, I guess that would mean how consumers feel. I don't know necessarily does it mean about the whole economy.
No, I think it's different for different sectors, for different groups within the consumer base.
Right.
Okay? So when you take a look at the higher end,
right,
and you take a look at how the markets have moved, how we moved off of March 2009.
Yes.
Okay, the small caps, got over the previous highs.
Right.
Okay, came all the way back up there. So on the larger group, and those folks that have got, had some that stayed with the ride all the way down, all the way back up.
Right.
So on the higher end, their bank accounts, their 401k accounts, and so forth, came back up. Maybe they got 70% of the way. 60%.
They got close. Exactly.
They got close. Okay, so they got close.
And that's what's so deviant about the market.
Absolutely. So people are
better take it, folks.
That's right. They're wiping their brow,
right,
saying, "Okay, made it through this." Now, if you're in that category class, right? What you also saw was this huge reduction in real estate prices.
Yes.
Now, in that group, that's a group of people that have got typically more than one home. Okay,
right.
And the higher,
That's right.
right?
That's right.
Okay,
Absolutely. Right.
Or if they don't, they've got, they're looking for other properties or what have you, but they understand, that the wealth accumulation that's been built up across the world mostly comes from real estate.
Yes.
Right?
Yes.
So I think in that group of people, the consumer confidence is pretty strong. We see that in the luxury index with regard to spending that's out there.
Right.
I think you see that, in stores like Tiffany's and other higher end and maybe higher end restaurants or what have you.
Right.
So you see that group of people, and I don't know who they actually. I've never gotten called to ask me about consumer confidence. Have you?
No, I haven't.
I wonder if any of our listeners have been called, and this thing comes out right? So that's kind of an interesting thing. Folks, if be curious if anybody's actually, I don't know how they come up with that, what that survey includes, but I don't think there's anybody in this office. So I think that on the higher end, I think consumer confidence is. I think when you see what's going on government-wise and so forth, you have the jitters. You don't have to. When you take a look at what's going on in Europe, I mean, you just have to read the newspaper, watch the television, listen to radio.
Yes.
Know that we've got that our system is pretty messed up.
Yeah.
Worldwide, right?
Well, that the folks running the system is messed up.
Yeah. Oh, yeah, absolutely.
Right.
Yeah, for sure. Now on the
it's corrupt, folks. That's the bottom line. The bottom line is that when you talk about the soft money paying off the Republicans and Democrats, that's where the corruption comes in, and it's extraordinary. It's almost like it's really just like the debacle in the real estate market, whether it was in the 80s and the 90s. The banks, so many people thought they weren't doing anything wrong. They were just basically getting fraudulent loans.
Yeah.
I mean, if you ask a politician, they're going to say, "What are you talking about? Soft money?" Well, it's payoff. It's payoff money to basically take the rest of the citizens down the tubes.
Yeah.
Which is insane.
Yeah.
I mean, So, and that has to get corrected. We'll see how that gets corrected, but that will get corrected.
Yeah, yeah. Now, on the middle, in the lower end, there's no question that there has to be, there's been nothing but a huge tax with the higher energy costs.
Right.
Okay, so, with what you're paying at the pump, I mean, after a while, $3, $4 gas, it hurts. And I think you see that in some of the middle, medium, lower end restaurants. I mentioned to you, take a look at what goes on inside Mexican restaurants.
Right.
When I see those things not turning, several times a night,
that's a problem.
Yeah, to me it just spells what it matches exactly the sentiment that they've come out in this report. So I just see it at different levels. The consumer, confidence is just a little bit different.
Yeah, because if you don't have the cash flow, you're in tough shape.
Now at the top end, it can be taken away just like that, right? All you need is one more market, correction or what have you.
Right.
Okay, and I don't know that I'll call it a crash because, and I think that if we break some levels, that, we're going to see this market move down real fast.
Well, I'll tell you what I'm surprised about in the large end, and this may be regional, maybe throughout the country, but you'd think that after the downdraft in the market, the downdraft in real estate, people would basically be a little more careful. And what I mean specifically, folks, is this: is that what I've seen lately is that, and I've seen, and I'm talking both ends now. I could get two separate examples that on the high end, you have a house that maybe is worth, let's say $2 or $3 million, right?
Yeah.
And all of a sudden they buy another house, right? And think they're going to move the other house, right? And it's like, hold it, what are you doing? I was saying to one of my friends the other night, I said, well, what are you, crazy? Okay, but they already did it.
Yeah.
And it's like, what are you, nuts?
Yeah.
I mean, that's the quickest way to go down the tubes in about a second, right? Now, that's on the high end. I'm saying to myself, okay, so people absolutely, well, I don't think they're thinking clearly there. You should, if you're gonna do something like that and you're gonna swap out, you move the house, folks. You don't basically say that, okay, I'm gonna bring the house down to a certain price point, and then I'm gonna move the house because I think that's a good price point. That is not how real estate deals should get done.
Yeah.
Now, the second part, I can bring you down to the lower end.
Yeah.
Same deal, and on a smaller end, that you think some other deal is going to get done, and you're even buying a place for 40 or 50 grand, and all of a sudden you sign the contract before the other deal's done. Big mistakes, both parts.
Right.
That, in that context, I'm saying to myself, why don't people just have some patience, get the deal done? Folks, if you're swapping out houses, get the deal done first. Get the cash. It doesn't care whether you go live in a hotel room for 3 months.
Right.
Get the cash in your hand.
Yeah.
Then go make your deal. There's plenty of times to make deals for houses. Don't swap this thing out, because if you swap it out, you're in big trouble.
And pretty, so much inventory out there.
Oh,
that
huge. I mean, listen, the whole world's for sale right now, and if you don't think it is, all you have to do is basically go up and down the street, and then what you want to do is this: is that there's plenty of neighborhoods that don't have the signs, but they're all for sale. I mean, and well, we just had the good thing is the case Schiller just come out, and it was down year over year, but month over month, basically it was pretty good.
Yeah.
So it's gonna be wild watching this whole thing shake out, though.
Yeah.
No doubt.
Folks have gotten. You talk about how people wrote it down, have written it back up, and managing money, it's not a simple thing to do.
Right.
Especially because most folks haven't been taught, and we typically take what is the most important thing, in this case here, managing money, and we've given that responsibility to others.
Right.
Whether it's money in your 401k accounts, what have you, in your retirement accounts, and you've checked a few boxes, and maybe you select, 2 or 3 different funds, and you figure, okay, I'm going to, a third, and a third, but not understanding how the management inside those funds is taken care of.
Well, a great case in point, okay? Folks, this is a huge case in point. Yesterday, Steve and I were bringing up Sino Forest.
Right.
Okay, so check this out, okay? Sino Forest, of course, folks, that was the company, and we were talking about stops in general. So Sino Forest is the company that basically Paulson owned a huge amount of it. He, unfortunately got taken to the cleaners, no doubt about that, by a huge amount. But you know what he did, folks? At least he sold it. Now, he sold it, he got $6, $7 for it. Bottom line is that yesterday was trading at $4.81. The stock has halted again, and I believe it's still halted. One second.
That's a delay.
And if it's not halted, this is really trouble because it's at 35 cents right now. Yeah, well, it is. Okay. This is pretty sick. Now, I'm not sure. We'll see where this shakes out. But the bottom line, I don't think it's opened yet. But the bid offer on this is going to be probably around 34 cents. Now, my point, and Steve's point, is this. When we brought up the amount of folks that were buying or selling it, if you held, let's put this, if you put your own money up and you do take stops, that's awesome. That's what you should be doing, okay? But if you are in sometimes the mutual fund business, all right?
Right.
And, what we showed yesterday is that whether it's Hartford Investment, whether it's Ivy, whether it's Vanguard, whether it's John Hancock, okay, we'll start with Hartford Insurance. Hartford Investment, folks, they bought another third of a position. So they didn't double down. They just about doubled down. And it's in every single one of their funds. Every single one of their funds are going to take a hit beyond belief.
Yeah, and statistically, I know that 70% of the folks listening, have got funds invested in these companies, whether it's Hartford, whether it's Hancock, what have you. I mean, through their 401k accounts.
Oh, through the 401k, I get it. Okay,
yeah, they're invested. 70% of the folks listening are somehow invested. It may not be CINO, okay, but it's situations exactly like that.
Amazing.
Folks know that they've got a certain amount of money in their 401ks, but if you ask them which stocks they actually owned, they don't have a clue. I own the growth fund. I own, so on and so forth.
Let's see what. Let's go to Rick in British Columbia. Hey, Rick, what's going on?
Hey, how you doing today? Thanks for taking my call, guys.
Sure, man. What's happening?
JDSU went up, so I can pay my taxes now.
Oh, good.
That's a beautiful thing, man.
Yesterday, everybody and their dog were looking for gold to pull back anywhere from 1550 to there's a gap at 1650 and so forth. But one thing you did mention yesterday is respect the fact that gold has volume at the highs. And
we don't want to test to the highs now, man.
It sure looks like we're on our way.
No, we're not. That's okay. So the reason we don't want to test, if you're a bull, folks, this is the last thing you want. You don't want. Well, let's put it this way: if we get volume on the test, that's great. But if you're a true gold bull, you do not want to test right now because we have volume at highs. You stay right there, Rick. This is Steve Rhodes, Tom O'Brien. We get Rick from British Columbia. We have the Dow off 686 right now. Nasdaq's down 17. S&Ps are off 10. Gold's up $40. We get silver up 87 cents. Platinum's up 22. Bonds are up 1.5, and the dollar's up 31 cents. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit tfnn.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC. Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow right now down 96. Nasdaq's off 21. S&Ps are off 11. Gold is up 43 bucks. We're talking with Rick from British Columbia, and we're talking about the gold contract right now. So, you know, what you have, Rick, to me, what you have is this, okay, is that what, you know, we came down, and the way that we came down, of course, was vicious. We came off those highs. You're going right into ice right now, and on the 10-minute where this came into is 35,000 contracts. You know, we're not even, and I'm talking about a 10-minute 35,000 contracts. So all you're doing is come into ice right now, and you're coming into ice. The biggest one was 8,000, and that was done at 10 o'clock, you know. So, you know.
Yeah, I see that. The volume is, the two big bars, I got a 90-minute chart on gold. The two big bars today don't look slightly less than the two big bars to the down move yesterday, so I see what you're saying.
Well, they're not even on the down move. The down move, they're much, I'm talking about the down move when you're going back up to ice. Yeah. Going back up to ice is the 24th. If you're watching Tiger TV, folks, you'll see right where you're going. That's all you're doing. That's a normal bounce after the type of move that we've had down, you know.
Yeah. Well, see, this morning, one of your Fed guys started talking on an interview, and when Greenspan was there, they never interviewed Fed guys if they were in power. They would talk to them later, but now it seems like everybody and their dog's on TV trying to figure out, you know, because there's dissension amongst the group and so forth, right?
I'm bringing my dog next time.
They want to sell books.
As soon as he talked, gold went up 30 bucks.
Yeah.
You know, and what I'm saying is, we're set up for an ABC up here. You're right in what you're saying with volumes and stuff, but you know, we get any more of this kind of talk or whatever, you got a perfect ABC structure to set up the highs. And I'm not saying it's going to happen, but because
well, you know what? No, listen, we know it can't happen. I'm hoping it doesn't happen, because if it does, go up there and test it on light. See, right now, the way we're set up is that we're set up with volume at highs, volume off highs. Volume off highs say large correction. Volume at highs means the gold market's not over. If we go up there and test this thing, you know, particularly after today, okay, we test it next month, it's trouble in paradise, and you know, with lighter volume, because the way markets end is that you have volume first, folks, then you come back down, which we've come down on volume. If you go back up and test it with lighter volume, toast. I'm not in that camp, and I can tell you why I'm not in that camp, Rick.
Yeah.
The bond market this morning and the dollar are saying the exact same thing. The bond market saying the S&Ps are going down, the dollar saying it wants to go up. Dollar goes up, and that's where the disconnect is with gold. People don't even understand it. They'll go out there and buy the gold. The dollar's going up. Mathematically, gold is not going to stay up. So.
Okay. Hey, before I end, silver has volume at the highs. Correct?
Yeah, that's a beautiful thing.
$50 or whatever.
SLV, well, hold it. Let me actually put the SLV up, too.
Yeah, well, the only problem with the SLV is gold trades while we're sleeping. The SLV opens up at, what, 9:30 your time. So
yeah, give me 1 second. But I can pull up the other one, too.
Yeah.
Yeah, so,
but silver absolutely's got volume at the highs.
Look at volume. That's a beautiful thing. Exactly. Yeah. That's what we want. That's, see, because you want, and what you want and what you need are absolutely non-believers. And, you know,
there's enough out there. After that big $100 correction, there wasn't there was a few bulls around.
No, there's plenty of bulls. You hear the calls coming in yesterday. There's plenty of bulls, man. And our problem right now is that there's many folks that are buying gold that don't understand gold at all. Absolutely don't understand.
Were you on CNBC at 3:30?
This morning.
Yeah, when us Westerners were still sleeping.
What do you sleep for? Steve and I don't go to sleep. Call Larry.
I just take
sleep.
That's what we take naps.
Sleep is
we take naps.
Yeah. Sleep.
Naps, yeah.
What the heck is sleep all about, man?
Okay, thanks a lot.
Okay, have a great one. Have a safe one. You should have seen Harley this morning. He was so elated, man. We were out at 4 o'clock this morning, walking the neighborhood.
Oh, good.
He was grooving. I was grooving, too.
Good.
Oh, man, I'm telling you. Well, you know, it's going to get interesting here because, yesterday was the beginning. The orb is like yesterday and today, right?
Yeah. Well, we've got a number of lunar aspects that are occurring. So yesterday we had the new moon, and we had and the moon was on the equator. Okay. And then what we've got today is we've got the moon is going to be closest to us, perigee, at around around 12:45 this afternoon, Eastern Standard Time, I believe.
Okay.
So, you know, we've got a number of lunar aspects. And then we also have, from an astro standpoint, we've got Jupiter is in retrograde motion, and you've also got a Venus-Jupiter aspect. So you've got enough activity out there where you would expect some volatility today. Right. You know, we may see some type of pullback started, but both you and I want to see some conviction before we pull any triggers here.
Right. Particularly because, folks, you stay right there. Steve Rhodes, Tom O'Brien, we're going to be coming right back. Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
We do have a winner today, and he happens to be from my own state of California, Jorge Sandoval from Bellflower. Jorge, how are you today?
Good. How you doing?
I'm doing great. Hey, congratulations on winning the Great Panther Silver Summer Silver Giveaway. How's it feel to be a winner?
I'm excited. I feel so good right now.
All right. That's good to hear. And you've been listening to TFNN for how long now? Are you a new listener, old listener? What's the story?
I'm a new listener, 4 months.
Oh, wow. Okay. We appreciate you listening very much.
Wow, thanks a lot.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to TFNN.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. Don't forget, folks, at TFNN, we start broadcasting Monday through Friday, 9 a.m. Eastern Time. We go from 9 to 1, and, of course, we go from 3 to 6. Today, the lineup right after our show, Steve has his own show, The Trader's Edge.
Yep.
And then we go to Chicago for the Option Hour with Don Kaufman. And then we're going to go out to California for our man, Mr. Ken Shreve, 3 to 4 this afternoon. And then I'll be back 4 to 6.
Great lineup, if I must say. Great
big
lineup,
time,
huh?
big time, no doubt, man. Especially the guy from 11 to 12.
Ah, yeah, that's right. That's right. Yeah.
And, Rick was bringing up, folks, you had the Chicago Fed president, Charles Evans. He was on with Steve Leisman on CNBC this morning. And so, when gold did pop up there, that's his quote is that we need to do more.
Yeah.
It's going to get interesting. I mean, I'm sure they'd love to do more, but the fact of the matter is, well, what are they going to do? I suspect, President Obama is going to come out with a speech on Labor Day.
Okay.
And he just, his new economic...
You mean when everybody's barbecuing?
That's right.
He's going to be speaking?
That's right. Well, I guess the day after Labor Day.
Okay.
But he announced an economic advisor yesterday. Now, what's going to be interesting is that advisor had already come out saying that he'd like to see a tax credit for small business for jobs. Now, of course, we're a small business. I'd love to see that, folks, okay? Because what happens with a tax credit, of course, is that it goes against your bottom line, and it's a big number. And they're throwing around a $5,000 tax credit. And a $5,000 tax credit, I think, no doubt, would put more people back to work. Because as an employer, what does end up happening is that you say, okay, you know, what is the threshold where you can add another employee? You know, I mean, and we're growing. There's no, you know, but what does happen is that I think all businesses like tax credits. Credits come off the bottom line, which is a different ballgame.
All businesses making money like tax credits.
Yes,
you know,
that's right.
So it's only taking, you know, one segment of
it is. No, absolutely.
So you got to, because what happens with the tax credit side is that, you know, what we also need is we need people getting back to work by also starting new companies out there.
Oh, that's even more important.
Right?
That would be the way to do it.
So when you take a look at that tax credit piece of it, you know, and both you and I have started a number of new companies.
Right.
And look, folks, I don't care what business plan you put together, what spreadsheet, what it might look like. You know, life is different.
Yeah, totally.
Life doesn't go according to your plan.
No.
Eventually it does.
That's right.
But the timing piece of it, you know, which is why you got to listen to the Options Hour with Don, because you got to understand that piece of the timing. But just simply with regard to starting new businesses, which is so critical, especially when you've taken so many people out of the workforce.
Yes.
Okay. You know, you need folks that be innovative, create new things. And many times, you know, in the first year or two of business, you know, you're building your business. You may not be making money.
No,
so,
absolutely.
you know, there needs to be some additional assistance, in my opinion.
I agree.
There as well. The tax credit, you know, I think that should extend to beyond small business and really should be in big business, because the whole idea is we got to get people back to work. So I don't care, you know, how much money you're making and whether you're taking advantage of something. You should take advantage of it. Get folks back to work.
Right.
You know, whether it's IBM that's hiring or, you know, who.
Yeah, big jobs paying good money.
Coke doesn't. That's
No, big time. Big time.
You know, because that's really, you know, that's really such a key, is getting folks back to work.
Yeah, because then, of course, what ends up happening is that if you're working, you're feeling better, you're getting cash flow, you're spending some of it. At the beginning, I'm sure folks will be a lot tighter, which they should be.
Yeah.
But bottom line is that is where it's at. You know, and you get a couple of them saying hiring was done, but outside the U.S. Well, you know what? You can cry all day long about that, but the bottom line is that you know, to me right now, I'm not kidding. I don't even think that's an argument anymore. And it's there, but you know what? That's slave labor, man.
Yeah.
It is. It is.
Yeah, look, it's all about
we're going to have a good conversation. No,
we're in a worldwide economy. You know, I agree.
No, we are. You know, but the bottom line, folks, is that don't have that. You know what to do? This is where it goes from a yes to a no. Forget the no's. Get a yes.
Yeah,
Get to a yes. We'll be right back, folks.
That's right.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. Don't forget, folks, do grab your popcorn and don't jump right on Tiger TV, and you can get us each and every day on Channel 1. And, you know, if we do, you know, right now the Dow's off 65, NASDAQ's off 9, S&Ps are off 8. If we go overseas, however, you know, and folks, this is a heads up here, the DAX. You know, the DAX in Germany has been leading, and, you know, the DAX is not looking too good right now.
No, down a percent, more than a percent.
Yeah, and so it's going to get interesting to see how, now the DAX hasn't been able to, you know, well, first off, what you've had with the DAX is this. We had those 2 mini crashes. They saved it both times.
Yes.
But both times, it indicated a couple days later, watch out.
Yes.
So I'm not quite sure, you know, what is inside, what is making that happen inside the DAX. But the bottom line is that there is a problem out there in the DAX, and more than likely it has to do with
European debt or Greek debt or
big time.
The banks or something.
The German banks are on the hook, and they're on the hook for big, big money.
Yeah.
And Merkel's out there making like she's strong, that no, you know, you're going to do this, you're going to do that. See, you know what the amazing part to me is, like, if I was the president of one of those countries, and that, you know, they already worked up all that debt, and the bank came to me, what do you think I'd do?
What would you do?
I'd tell them take a hike.
That's right.
I would absolutely tell them to take a hike. You know why, folks? Because the politician's supposed to be working for the people. So what you have is this, is that whoever made the mistakes before that, well, that's too bad. So, see, what the threat is this. The threat is that the country won't get any more credit.
Yeah.
Now, if you take a number 2 pencil and figure out, do I want to pay everything and all the past mistakes that everyone made, or do I want to say that, you know what, you took the risk, it was a bad risk, that's too bad.
Yeah.
We're marking it down, end of the story, and we're starting again, and we'll see what we get. Now, that, to me, would be the number, because you're protecting the citizens' deal. I know...
Unless you put them out of business.
Unless you put the bank out of business?
Yeah.
Well, that's not your problem. That's the bank's problem.
Well, as long as my money's not there.
Well,
no,
okay.
Of course, with insurance.
That's a great point. Okay, so, no, I see what you're saying, that it can compound coming back to your own citizens.
That's
interesting.
Right.
Okay, interesting.
So,
no, that's
which is what obviously our FDIC.
That's real.
You know,
that's real. Well, we're lucky in this country. Yeah.
Well, we think we are.
Yeah, we are. Could you imagine?
True, no, but that doesn't mean that there couldn't still be run on banks and
absolutely.
or what have you.
No, for sure. We know there can be a run on banks. You know, in fact, if you look at the figures that came out of Bloomberg, how much the Fed gave all the banks. I mean, the banks had no money.
Yeah.
Thank God they gave them the money. So all you folks that were transferring money when that debacle was happening in 2008, you were smart to transfer that money.
Absolutely.
Because the bottom line, there wasn't any money there.
Yeah, that's right. That's right. Now, before we went to break, you were talking about, or you're picking up a comment about
slave labor,
or what have you. You know, so, you know, we're in a worldwide economy. I mean, nothing could be more true than, you know, the continued advances that we make each and every day, week, month, or what have you, and the world gets smaller and smaller and smaller. Now, we can complain about the fact that, there's labor that's being shifted overseas.
Right.
But just as the folks overseas can complain that, there's been an engineering of a weaker dollar in order to be able to help our larger companies be able to export products over there. So, we've also, harmed the companies overseas, Japan and others, in order to be able to,
argument can be made,
in Europe or what have you. So you've got to be able to take a look at things, on a worldwide basis, and then you got to say, why am I even spending my time there? Your time's got to be focused on, figuring out how to get back to work, become more productive, produce more income.
Exactly. And it's funny, folks. It's not funny, but this is, I think, how the world thinks that perception is everything. And when I was growing up, the whole Boston corridor, folks, the whole Northeast corridor was all about it was the biggest shoe manufacturing in the world, okay? Now, all those shoe jobs got lost, right?
Yeah.
Devastation.
Yeah.
They thought that Boston and New England were never going to come back, okay? And I remember growing up with it. This is devastation. They were big jobs, too. Making shoes was huge money, okay?
Yeah.
Well, bottom line, folks, is that all those factories, all along New Hampshire, Vermont, Massachusetts, okay? They not only, there was a bad scene by probably 12 years, okay?
Yeah.
But the bottom line, they not only come back, and all those jobs went to Asia. They not only come back, technology came back there. The quality of life was dramatically better.
Sure.
Okay?
Sure.
So that's my perception of that when jobs actually go overseas, and all it does is, as you said earlier, we'll go start a business. Use your mind, folks, because everything that we need is right inside us.
Oh, absolutely.
So you just grab it. You just grab deeper inside of you, and it's fun.
Yeah.
You reach down, grab it up here.
Look, there's no question that each of us are so resourceful. We're more resourceful than we give ourselves credit for.
Big time.
And if anything, we're typically way too harsh on ourselves when we evaluate, our own abilities. Now, it's good because it can motivate you, okay, to want to do more. I mean, that's what it's supposed to. That's what you're supposed to be able to inspire yourself.
Yeah.
As opposed to looking for inspiration elsewhere. The inspiration elsewhere, it's nice to have a little pat on your back or something, but you got to figure out how to inspire yourself.
Big time. And you brought up a great point, though. And, folks, what he just brought up, that whole thing, every time you hear in your ear that, no, I can't do this, I can't do that, that, folks, is actually coming from a heavier establishment, corporate-wise or government-wise, that want control.
Yeah.
That's where those messages get filtered in.
For sure.
Because that's what control mechanisms always want to do. We got to keep the populace down.
Yeah.
Let's keep them down. How can we keep them down? Throw a couple more reality TV shows on. I think I'm prejudiced against those reality TV shows.
Look, I'm in your camp.
I know. I do keep bringing them up.
No, it's still. Well, hey, look. The thing is, each and every day we're watching reality TV in the markets,
totally,
worldwide.
Totally.
What's going on? Take a look at fear and greed, emotion.
That's right.
So we're taking a look at the real thing and truly giving our immediate advice right here.
Right.
It doesn't matter how much preparation work you do or I do. Before maybe we send out a newsletter or just our own analysis.
Sure.
The bottom line is until you actually start seeing something happen right in front of you. You get more information, and it is right here, and which is so cool about the way that, the power of, when you really think about it, folks, the biggest shift has been that the real power with regard to money has now been brought to us, where the information is really right in front of you. So if you want to really understand, reality TV, this is where it's at, because this is where you can make money.
Big time. Folks, you stay right there. Our man, Mr. Steve Rhodes, is coming right back, and then Don Kaufman, and of course, Ken Shreve this afternoon.
We got one more segment. Don't.
Really?
I think so, yeah.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then EverBank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, EverBank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. EverBank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call EverBank today at 877-471-5700. 5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40. Welcome back, folks. That was a quick day. See,
I brought him back. I threw my fishing pole out there.
That was amazing.
Reeled him back in.
That was amazing, man. I'll tell you, I don't. Yeah, that's a beautiful thing.
Yeah, but again, because we're talking about reality TV, and when you really think about how, because you're really making a great point when you take a look at how things shifted in Boston over a period of 12 to 15 years. Right. Okay, but what people did was they went out, they retooled themselves, and became better. So when you really take a look at what's really shifted, when we take a look at technology, we're trading this if we're on the floor here.
Oh, big
even
time.
Better,
Oh, big time.
I mean, the information that we really do have available to us. And so over a period of time, if you just simply retooled yourself.
That's right.
And you empowered yourself to put your money to work.
That's right.
So you knew what was inside your own funds, because you can create whatever kind of basket of funds you want, whether you want to trade an existing ETF or whether you want to create your own version of an ETF.
Right.
And empower yourself and have control. And it's not like you have to stay in front of the screens all the time.
No, you don't.
You don't. You don't have to trade this stuff from an intraday standpoint.
And the amazing part, too, is this price spreads. If you weren't around, and I'm sure most people you were around, but not inside the markets, the difference, Don Kaufman brings it up a lot, penny spreads.
Yeah.
It is dramatic, folks, okay? And in the 90s, we were always trading, so picture, you were always trading with the 16th, which is 62.50, an eighth, which is basically 165, 125, okay? Or a half a point, or a quarter a point, which is 250.
Yeah, yeah.
What that means, folks, is that before you'd be getting in, you'd be losing money immediately.
That's right.
Okay, we had an internet machine which helped, but the bottom line is that the spreads were dramatic.
Right.
Now you're talking no spreads.
Yeah. Nothing
a
to
penny.
That's right.
Okay. So what you're talking about now, you're strictly talking about discipline.
Yeah.
Discipline and a system that you're comfortable with.
Yeah. And so when you take a look at that, and that's really what your whole mission really is about.
Yeah,
whether it's totally started out that way, or the whole universe has kind of worked its way in there, and you take a look at Tiger TV, what is it we're doing here, Internet TV, and how this show, how the series of shows that you've put together here, the type of empowerment that really can reach out to the folks out there. We can retool America.
That's right.
And our listeners, it's important for our listeners to get their friends and their family involved, because this is the real reality TV. And folks want to scare people about about managing their money. Whether it's money managers that are out there, what they want to do is they want to just scare you about taking that responsibility yourself and managing it.
Well,
you know what I mean?
You know what I missed this morning on CNBC? I was on CNBC this morning, folks, 6:30, and that is on the front page of our website. And Richard Bernstein, it was a good question, it was a great question actually. He's asking me about gold at 800, and 20 years ago. And then it was a 20-year bear market. And on the way home, I says, I should have said to him, I says, what's the difference of that than the S&P being at the same time it was 10 years ago, and on top of that, though, that he's already taken all the fees out of it.
That's right. Yeah, absolutely.
So
that's right.
It gets real interesting, in that context when people make those arguments. Because, the bottom line is that one of the main reasons, folks, that Wall Street does not like gold is they couldn't figure out how to make money on gold. Every time we've talked about this before, that gold costs money to store. Oh, right. Yeah? You get $35, $60, you can store $5 million worth of it.
Yeah,
give me a break.
Absolutely.
Okay?
That's right.
So that whole argument doesn't hold up. The context of worldwide markets, hold up in a big way. Now, you talked about when we first started. Now, check this out. When I first started, this program, the reason I started it. Now, this was a reason, and it was a reason, because I wanted more eyes to look at more stocks, because we were trading so many stocks. That was the quickest way. Self-empowerment.
Right.
And it's still self-empowerment.
Totally.
The bottom line. It's still, isn't that a beautiful thing?
Totally. Absolutely.
It's a beautiful thing, folks. Thanks for being with us. You stay right here, because our man, Mr. Steve Rhodes, is coming right back up, and he's going to give you the trader's edge.
Absolutely.
We're going to be right back, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.